Again, I'm Victor Terblanche from VAT IT. We basically specialize in South African VAT consulting. And the next section is how to avoid VAT leakage and optimize VAT savings. I think a very interesting topic for all tax practitioners as well as corporates sitting in the audience. I haven't done any PowerPoint points on the PowerPoint presentation, but it will be a discussion. Just stop me anywhere if you need more information. I think in today's environment where you have your output tax generally set up on your ERP accounting systems, there's minimum that can go wrong with that. If there's a sale, obviously on the date that you generate the invoice, the sales trigger on your system, and in terms of the accounting packages, they all cater for that type of event. You've got your zero ratings and you've got your standard rated sales. So effectively, if you look at a compliance type of scenario, what can go wrong is probably sitting more or less on your input tax side. So if you get audited by SARS, they'll look at compliance, they'll look at are your invoices compliant with VAT law. If not, obviously they write it back. But on your sales side, everything runs smoothly. So we're going to do this section to see how we can save and optimize on VAT within our organization. As a company, as a VAT vendor, you are entitled, obviously, to claim your input tax and to claim anything that is allowable in terms of the VAT law that you are entitled to and that's used in the course of furtherance of your enterprise. So we want to ensure that there is minimum leakage in our VAT systems, that we are claiming everything, because what happens if we don't claim on everything? As Reg discussed and I previously said, VAT is a system that would basically add value from manufacturing straight through to your final consumption. So if I don't claim all the VAT that I'm entitled to, I'm actually taking a cut directly from my profit in my company, and SARS gets the benefit of that lost VAT that I haven't claimed or optimized fully. You're 100% entitled to claim all your expenses. The VAT law allows you to claim your expenses in a period of 5 years. That's prescription. So if you've discovered an invoice that was dated 3 years ago, and you can definitely determine that you haven't claimed the input tax on that invoice, then you are entitled to claim it. The law provides for that, and different countries have different rules around that. For example, Australia will have a 6-year prescription period for that. Other countries, like in Europe, if you claim through a 13th directive VAT claim scenario, they would have a year or sometimes 6 months for you to claim those expenses in. So it is there, and you can claim it even if it's an invoice that is older than a year or two. You're still entitled to claim that invoice if you've missed it for some reason historically. So where do we normally find issues around VAT leakage in our company? First of all, your ERP, your accounting systems, is one of the biggest areas where you can find that you actually are not claiming everything that you should be claiming correctly, or that there's some form of VAT leakage that puts you into a negative type of cash flow or disadvantage with in terms of claiming everything that you're entitled to. The second area, and I'll go into more detail with the software now, the second area is VAT law interpretation. VAT law sometimes allows for you to claim input tax deductions. If you don't do the training and you're not aware of